Kia ora, and welcome to the CoreLogic Property Market Update for PPD June 2023. Property values continue to fall in Aotearoa, with the CoreLogic House Price Index down 0.7 on the latest monthly reading for May. Beneath the surface of the nationwide index, there are varying results, which could indicate an indecisive market closing in on a trough. Tahuna, Queenstown, remains the key differentiator in the market, with values increasing 0.8% over the month to now be 3.5% higher than 3 months ago. None of the other monthly readings were this strong. However, Wanganui property values flattened over the month and have increased 1.1% since the end of February. We're cautious to read too much into some of the other areas which showed a moderation in value falls over the month, such as Whangarei up 0.1%, Otipoti Dunedin 0.0%, Kirikiriroa Hamilton, Porirua and Te Papa i Oia Palmerston North all down 0.2%, especially while the 3-month index results remain noticeably negative, down 2% or worse. Te Awa Kairangi ki Tai, Lower Hutt, is one to watch however. A moderate negative 0.2% fall in May completes a 3-month period where values are now down only 1% since the end of February, giving hope to homeowners who have seen a fall of more than 17% in the past year and a total of 22.5% since the peak of the market. Te Awa Kairangi ki Uta, Upper Hutt property values meanwhile continue to materially fall, down 2.5% over the month. Similarly in Tauranga, values fell 2.3% in May, while the Kapiti Coast down 1.5%, Turanganui-a-Kiwa, Gisborne down 1.4%, Hiritonga, Hastings down 1.2%, Ahuriri, Napier down 1.0%, and Ngā Motu, New Plymouth also down 1.0%, all retained relatively strong downward momentum. These regional differences will likely persist throughout the rest of the year as each area deals with a weakening nationwide economy, localised disaster recoveries in some places, and the fallout from such a strong COVID-induced property boom in their own unique ways. One thing all regions are contending with to their own degree is falling advertised supply, limiting options for the buyers who are active. Turanganui-a-Kiwa, Gisborne in particular has as low a level of supply for this time of the year than any of the past 4 years, which could mean some price pressure returns if demand starts to lift. Of course, the devastating impact of Cyclone Gabrielle on the region could be playing a part here in reducing the number of properties available, and this will also shape buyers' nervousness and expectations with the floods still fresh in many locals' minds. Supply in Tamaki Makaurau, Auckland, is also approaching similar lows to 2 years ago. And while anecdotes of renewed confidence to the market are reflected in a minor lift in sales volumes in May, these should probably remain in check, still lagging the 10-year average for May by 32%. The renewed confidence is in some part attributable to the Reserve Bank's recent forecast that the official cash rate should be on hold for the time being, as they pause to assess the impact of a tightening cycle which saw the OCR increase by 525 basis points in roughly 20 months. Many borrowers still have an adjustment to their mortgage repayments to come, with almost 50% of mortgages to renew on higher terms in the next 12 months. With the Reserve Bank's long-held forecast peak of 5.5% now here, now's the time to wait and see how people cope. For those who have already moved on to higher rates, most still seem to have done so without too many troubles. Mortgage arrears actually reduced in April, according to Centrix, and while Stats New Zealand confirmed we were in fact in recession in Q1, people continue to hold on to their jobs, which is enabling them to redirect spend to their mortgages and hold on to their properties. A look across the Tasman provides a tentative guide for how things could play out over the second half of the year. Low advertised supply, together with extremely tight rental conditions and a surge in migration, has supported an early rise in housing values across most parts of Australia. Values in Australia have now increased for 3 months in a row. However, with sticky inflation and tight labour market conditions, the Reserve Bank of Australia has renewed their cash rate hiking activity, which could curtail the upwards momentum in housing values. This serves as a good reminder that we're unlikely to immediately return to strong rates of growth once the market does find a floor, especially with interest rates unlikely to fall anytime soon. plenty to pay attention to, so make sure to download our free monthly housing chart pack to stay across the latest property market data and insights. You can access all our news updates on the CoreLogic NZ social channels, including LinkedIn, Instagram, Twitter or Facebook, and subscribe to the New Zealand Property Market Podcast on all good podcast players. Mā te wā.